ECB to chart course out of stimulus, putting stage for rate hikes. Frankfurt. The European Central Bank will pull the plug on years of stimulus on Thursday and sign a string of fee hikes to combat surging inflation, leaving markets handiest to bet the dimensions and pace of coverage tightening. With inflation at a record high 8.1% and broadening speedy, the ECB has already flagged a series of actions, hoping to prevent rapid fee increase from developing right into a hard-to-break wage price spiral. Details stay elusive, however, as predicting inflation has validated impossible, suggesting the ECB will most effective sign its preliminary steps on Thursday and maintain lots of discretion in addition down the road. What seems sure is that the ECB will stop its long-running asset purchase program on the cease of this month, promise a rate hike on July 21 and signal that the deposit fee might be out of bad territory inside the one-third sector. Everything else, which includes the scale of the preliminary fee boom from -0.5%, is probable to be left open, with ECB leader Christine Lagarde emphasizing flexibility and optionality. While the financial institution has signaled a choice for 25 basis point hikes, the energy-driven surge in charges could alternate that during just weeks. A handful of policymakers have already stated that a larger increase desires to remain in play. Supporting their case, new monetary projections from the ECB are in all likelihood to indicate that inflation across the 19 nations that use the euro will maintain above its 2% goal via 2024, pointing to 4 instantly years of overshooting. The chance of a 50 basis point hike is rising through the day, Moody's NYSE MCO Analytics senior economist Camille Cover stated. We presently view a 50 basis point hike in July as feasible but not going. In contrast, a 50 basis point hike in September is as in all likelihood as it is unlikely at this factor. It is even possible that the financial institution will into multiple 50 basis point hikes, he said. Markets are pricing in 135 foundation factors of rate hikes by means of the cease of this year, or in growth at each assembly from July, with a number of the movements in extra of 25 basis points. That leaves the ECB in a difficult position, just months after Lagarde stated that a charge hike this year changed into fairly unlikely. If she ignores markets, even more competitive tightening is probably priced in, unnecessarily pushing up borrowing costs. But if she pushes returns strongly, the ECB president might sign a commitment that would turn out to be out of date inside weeks, similar to the no-rate boom pledge. The ECB's exceptional hike in over a decade could still leave it trailing most of its worldwide friends, such as the U.S. Federal Reserve and the Bank of England, which have been raising aggressively and promising even more motion. The hawkish pivot begins, Bank of America NYSE, BAC, stated in a word. We assume the ECB to leave the door open to 50 foundation factors in July and September by way of signaling that bad fees will stop during the third region. Where does it end? While the begin of policy tightening is now set, the cease factor stays unsure. Lagarde has stated that rates should flow closer to the impartial point at which the ECB is neither simulating nor holding back increase. But this degree is undefined and unobservable, leaving traders guessing just how some distance the ECB desires to go. In our view, the neutral rate is round 2%, Berenberg economist Holger Schmieding said. We assume the ECB's important refinancing charge, currently 0.0%, to attain this degree in mid-2024 after 3 rate hikes of 25 basis points within the second half of 2022, 3 such movements in 2023 and 2 further increases in the first half of 2024. The principal refinancing charge is formally the ECB's benchmark, but it has used the rate on its in a single-day deposit facilities for banks as its foremost policy price for lots of the past decade, given that banks have piled up hundreds of billions of euros really worth of extra liquidity. Another query is how the ECB will manage the divergence in borrowing expenses of diverse member states. Nations with larger debt piles, together with Italy, Spain and Greece, have already seen a sharper increase in borrowing charges, a headache for the ECB's one-size-fits-all economic coverage. While the ECB promised to combat unwarranted fragmentation, it has but to define unwarranted and has not stated what action it would take to tackle it. Lagarde could make clear these factors, but she is not going to announce a specific tool on Thursday, emphasizing as an alternative the ECB's flexibility and dedication to behave quickly in case of marketplace turmoil.